Welcome to you, my dear children. We meet again with the Business and Accounting Chapter 2 of Unit 7. Source documents. This is the latter part of Unit 7. Prime entry books. We learned about prime entry books and we learned the different prime entry books used in a business. You remember. There are how many? There are, I'm asking how many prime entry books? There are 5, 6. How many prime entry books in a business? Let's count. Let's count the prime entry books that we learned in the previous session. The students who were with me, who got together with me in the previous session, they know, but for the newcomers, for the new students, new children who are watching this session without watching the previous session, children, we talked about 6 prime entry books. 6 prime entry books. First one, the cash book. Second, bank book. Third, petty cash book. Fourth, purchases book or purchases journal. Fifth, sales book. Yes, sales book or sales journal. And sixth was the general journal. That's right. Good. You remember all the 6 prime entry books. And children, we learned what type of transactions are recorded in these prime entry books. What type of transactions are recorded in these different prime entry books. And when I ended the previous session, you remember I told you that there are some other documents needed to prepare the prime books. We say prime books, we say prime entry books, we say subsidiary books. All names are used for the same set of books, the 6 prime entry books. I told you that there are other documents, there are other types of documents which are needed to record transactions in prime entry books. Well, here you go, children. These are those documents. We call them source documents. Source documents. There should be an S here. Source documents. Source documents. Yeah? Well, when I say source documents, most of you might not have heard what source documents are, or you might not be familiar with this word, source documents. But if I give you this word, if I give you this name, now you know, right? You said, that, didn't you? Yes, children. In our day-to-day lives, in our normal life, in real life, we refer to source documents as bills. We say bills. Yeah? Source documents are called in our day-to-day lives, like when you go to the market, when you go to a shop, when you go somewhere to buy something. Let's say you go to the nearby hardware to buy some nails and some sellotape and things, brushes and brooms and things, cleaning materials. You go to the nearby hardware and your father says, bilak illaga. Don't tell me that you don't know about bills. Bills are the common word which is used, not the proper word. It's not the proper word. The proper word is source documents. You can see a lot of source documents right here. A lot of bills, invoices, receipts, vouchers. A lot of source documents. I want you to see this. Do you see this? Haven't you seen this in some of the shops or groceries that you go to? Haven't you seen the Mudalali collecting bills like this, in this manner? Haven't you seen this? Mudalali collecting the bills on there's a something like a nail or a nail or a what do you call it? Something like this. On a plate, there is a stem standing fixed on a plate. All the bills are attached to this like this. At the end of the day, the bills pile up on that stem, something like this. See, this is something which is used to collect the bills. Most of the roadside shops and small retail shops and or even the wholesale shops, they use this type of a tool to collect the bills. So we are going to learn about these so-called bills. That is not the proper word. Okay, the proper word is source documents. Let's find out what source documents are. Children, source documents are documents which are prepared by the cashier or any allocated person in a business, in a shop, when a transaction happens. Okay. Now, I want you to picture this. You go to a supermarket. You go to Food City or Kiehl's or whatever the supermarket that you go to. And you bring your cart to the cashier and take all the goods and put the goods on the cashier, right? When the cashier scans all the goods, she puts all the goods into grocery bags and hits after scanning all the goods. She puts all the goods after scanning the goods. Okay, the barcode scanner gets the price of the good into the computer when she scans the barcode of the good. So after scanning the goods, she quickly puts all the goods to grocery bags and hits enter in her cashier computer. Hits enter. When she hits enter, the total comes on screen and you pay the money. She takes the money, puts the money into the drawer, close the drawer. When she closed the drawer, just like that, the bill is printed. The bill comes out of the small printer that they have, and the bill is torn. She tears the bill, gives the bill to you. Okay. Do you think that is the only bill which is printed for your transaction? No, children. They keep a copy. There's a slip under your slip. The cashier tears off the upper layer or the upper paper, the bill, that's what we call it, and the original bill is given to you. They keep a copy of the bill at every cash point, at every checkout cashier. The copy is kept. That copy is kept for the reference of the later reference of the business. Likewise, children, every transaction must be recorded in a source document or a bill. All right. Let's find out what the book has to say about bills. As and when transactions take place in a business, the documents prepared by including all the details of such transactions authorized by a person in charge are known as source documents. As and when transactions take place, documents prepared by including all the details of transactions and authorized by a person in charge. That person in charge is most of the time is the cashier. Yeah, cashier. Most of the time, children, it's the cashier. He or she gives you the original bill, original source document, and keeps the copy in the machine. But what you should bear in mind is for every transaction there must be a bill or a source document. Yeah. When a source document is created, that source document can be piled up in this type of a tool. If the source document is not printed from a cashier printer, there are small printers attached to every cashier. If that type of a printer is not there, the Mudalali writes the bill manually by hand. Have you seen? They write the bill. Old-fashioned traditional shops, they don't keep cash machines and cash tills, so they don't print the bill. They write the bill manually, and the bill is taken off from the invoice book, or they call it bill pota. The bill is torn, taken out from the book, and the original is given to the customer. Copy is kept in the business like this, in a tool, using a tool like this. But children, these source documents are collected and segregated, categorized at the end of the day. Although they are all the printer, the cashier printer prints a roll of bills, those bills, those source documents are categorized at the end of the day. Okay, because there are different transactions, and for different transactions, different source documents should be raised or should be issued. Okay, those source documents also must be categorized. All the types of every type of source document, all the source documents can't be messed up and piled up together. No. All right. So it says here, each source document prepared by a business is assigned a serial number. Source documents are used as a basis for recording the transactions in the prime entry books. Didn't I tell you this earlier? Source documents are used to record transactions in the prime entry books of the business. Later in the day, in the evening, after having a tea, the shop is closed, right? The business operations are, the business is closed down for the day. Then the bookkeeper can get to work. Collect all the source documents, bring the source documents to his table or to her table. Segregate the source documents, invoices separately, receipts separately vouchers, separately. File the source documents, file them. Then record the source documents in prime entry books, relevant prime entry books. You get it? That is the process. Right, children? And normally in every source document, this information is included. Name and address of the business, serial number of the source document, date of the transaction, details of the other party, which is customer, details of the other party, that is the details of customer, name of the customer, if needed. You can write down the name in the bill, name of the customer. Description of the transaction, the monetary value or the amount of the transaction, and the signature of the officer who is issuing the bill or the source document. Right. So these are the information which are included in a source document or a bill. Okay. Just try to remember at least 3, 4. The amount of the important ones. Important ones, children. At least 1. No, at least 2. Mainly the monetary value means the amount of the transaction, and the details of the customers. Details of the customer. These things are the important things. Date of the transaction. Just remember 2 or 3. It'll be useful for you, not for me. Okay. And types of source documents. Types of source documents. Different types. There are different types of source documents. Here you go. Let's see how transactions are recorded in prime books. How transactions are recorded in prime books using source documents. How transactions are recorded in prime books using source documents. We have the first prime book, the cash book. Cash book is given to you and the relevant source documents are given in front. Receipt, payment voucher. Now, how about that? Receipts and payment vouchers are relevant for the cash book. What does it mean? What does it mean, children? It means, my dear students, when a receipt is raised or when a receipt is issued to a customer, a receipt is issued to a customer in order to record a cash receipt, a cash receiving. So for what type of a transaction do you issue a receipt? For what type of a transaction do you issue a receipt? You issue a receipt for a transaction such as, let's say, a cash sale. Selling goods for cash. Yeah? You sell a stock of goods to a customer. The customer pays money. Then and there you get the money. So it's a cash receiving. You write a cash receipt. give the bill to the customer. Keep the copy with you in the book. You know, normally in our real day-to-day lives, children, most of the businessmen, most of the modalalis and shopkeepers and everybody calls these source documents bills. They call these source documents bills. Bill pota. Okay, that is the common word. That is why children, most of the time, receipts are, vouchers are all commonly, they are called bills. Okay, but I told you that it is not the proper word. Source document is the proper word. A receipt book should be there in a business. A voucher book should be there in a business. If you don't have a computerized cashier, cash machine with a printer, if you are manually writing the source documents, you should have a receipt book and a voucher book and an invoice book. Different types of source documents. Okay, a cash receipt is issued for cash receivings. A payment voucher is issued for a cash payment. If you pay, let's say if you pay a supplier 100,000 for the goods that they have supplied to us, you pay him with 100,000 cash. You pay him with 100,000 cash, and you write a receipt. No, you write a voucher, and it is signed and given to the relevant party, and copy is kept in the business. Cash payments, you issue payment vouchers. For cash receivings, you get cash. Yes, you issue a cash receipt. Likewise, children, bank account. For the bank account, we have relevant source documents such as deposit slip, payment voucher, bank statement, check return notification. These source documents are relevant for the bank account. A deposit slip, you know a deposit slip, right? Right? Oh, don't tell me that you don't know about deposit slips. When you go to a bank, when you walk into a bank, children, there is a high table, like a little small table in front of the bank. Like as you enter the bank, any branch, any bank has this, a small table. Okay, on that table there are multicolored slips or pieces of printed paper in different colors. There are light green color slips, light pink color, light yellow color slips. Those are used for different purposes. If you want to deposit money into your account, you should fill a pink slip. Most of the time deposit slips are pink, or maybe it could be yellow. The color doesn't matter, children. A deposit slip should be filled with the amount that you are going to deposit and signed by you, right, with the cash amount should be handed over to the counter, to the bank counter. That deposit slip also has 2 layers. Original is kept, copy is given to you. That deposit slip is the copy of the deposit slip is a source document for you in order to prove that you have deposited money into the bank account. So when it is about the bank account, you use these source documents to record transactions or anything that has happened with the bank account. All right. Okay. Then we have the petty cash book, children. The petty cash book, for the petty cash book, the relevant source document is the petty cash payment voucher. It's a small printed book with many petty cash vouchers. Like, it's another bill petty cash voucher. There are petty cash vouchers, printed petty cash voucher books that you can buy. You keep a petty cash voucher book in your business and you write and issue petty cash vouchers whenever a petty cash payment is done. As always, the original is issued, petty cash voucher original is issued, copy is kept. That copy is used to record every transaction that has happened during the day in the petty cash book. Okay. For the petty cash book, the relevant source document is petty cash voucher. Next, we have the purchases journal, purchases invoice, sales journal, sales invoice, general journal, journal voucher. These are the different source documents issued for purchasing goods on credit, purchasing goods on credit, purchasing goods on credit. You remember when we learnt about the purchases journal, children, I told you that purchases journal, in the purchases journal, what transactions are recorded? I told you. Yeah. Obviously, in the purchases journal, what are recorded? What are recorded? Purchasing of goods. Purchasing of goods on credit. Purchasing of goods on credit. Yeah. So, for purchasing of goods, when you purchase goods on credit, you issue a purchase invoice. That is the source document. And those purchase invoices are all collected during the day, and at the end of the day, all purchase invoices are, all those amounts on the bills, all those information on the bills, on the purchase invoices are recorded in the purchases journal. Likewise, sales journal, for the sales journal, sales invoices are used. You issue sales invoices for selling goods on credit. That is the transaction. It's a transaction that sales invoices are issued for. Sales invoices are issued for selling goods on credit, when goods are sold to the customers on credit, not for cash. Finally, general journal. I told you that the general journal is somewhat similar to a garbage bin, a dustbin in your classroom. Yeah. Just to remember that a general journal is used to record all the transactions which cannot be recorded in these other journals. Likewise, the general journal uses the journal voucher to record transactions. Alright, so how transactions are recorded in different prime books using different source documents. There you go. That is the importance of source documents. Alright, children. Moving on. Why source documents are used? Can be used as an initial document for a transaction. Can be used as an initial document for a transaction in order to record the transaction initially. Okay, for the very first time. Every transaction is recorded in source documents for the very first time. Before the transaction, the amount is entered in anywhere before that transaction is entered in any place. Before anything, you record the transaction in a source document, or you issue a source document for the transaction. Second, can be used as a written evidence. If you have the bill only, you can even exchange the goods. If only you have the bill, if only you take the bill with the goods, the business or the shop will exchange. Or much worse, they will not even accept the goods if the bill is not there. So the bill should be there, the bill should be shown, should be produced with the goods to prove that you bought the goods from that shop. It is an evidence. The bill or the source document is a proof or an evidence of the transaction. Yeah, fair enough. Without the bill, you can't even exchange a dress that you bought from a clothing shop. Yeah. Additional information on transactions can be obtained. Additional information. What additional informations? The name of the customer, date of the transaction, the quantity of the goods purchased. All the information is recorded in the bill, in the source document. So additional information can be taken, obtained. Can be used for recording transactions in prime entry books. Can be used for recording transactions in prime entry books. We know that. I told you that the source documents are used to record transactions in different prime entry books. Source documents are used. Responsibility can be assigned to a specific officer as it is authorized by that person who has issued the source document, who has issued the bill. That person should be responsible of that transaction. Okay. If we take another transaction, who has issued that transaction, that source document for that transaction? That person should take the responsibility of that transaction if something is wrong. Okay. So the responsibility can be assigned to an officer, to an individual, to a staff member of your business by referring to the source document. Yeah? Practical things, children. Practical things. You can study each of the prime entry books mentioned above. The next chapters, we are going to prepare all the prime books, children. All right. Right. So, a number of activities, several activities are there in this unit, in this lesson. We are going to do all those activities. But looking at the source documents, the bills, right, invoices, the receipts, and with the paid seal, you must be having these things in your mind. You must have a memory of this, must be having a memory of these things. At least once in your life, you have used these source documents, these bills. Of course, yes. Of course, you have never gone to a supermarket. It can't be, no. It can't be. You have never gone to a shop or a hardware shop or a grocery shop or wherever. where you asked for a bill, where the Mudalali gave you a bill. Of course, at least once in your lives, you have used these source documents. It's the importance, children, is not, most of the time, is not for the customer. The importance is to the side of the business. You know, the importance of source documents is most of the time is for the business. Those importances we discussed, right? Those importances we discussed right here. Why source documents are used? What is the importance of source documents? And different types of source documents, okay, used by businesses for different types of transactions. Right, children? So after we discuss the uses and the importance of source documents here, shall we go and test our knowledge a little bit? Your knowledge, not my knowledge. Let's test your understanding. All right, understanding about prime entry books, source documents related to those prime entry books, and the functions of these prime books and source documents. Practical knowledge is very important. Practical understanding, the application, how to apply these bookkeeping and accounting practices in real life, how to implement start and open and maintain a set of books, prime books in your business. These are the things that we should focus on in the long run. But for the exam, if you are learning this subject only with the aim of facing the exam paper, think again. According to me, I recommend this subject to my students who are keen on getting the exposure, the knowledge and exposure in business. Business education is all about practical application. It should ultimately be something that can be applied in practical, in real life, in your businesses, in your father's businesses, in your family businesses. Yeah, right? So in order to do that, you need to have a practical understanding of the subject and of everything that we learn here in this subject. Right, let's test that, shall we? Who's up? Who's up with me? Yeah, you better be. You better be. Right, children, read and understand each of the following statements related to prime entry books and state whether they are true or false. Okay, so this is a true or false exercise. This exercise appears on your textbook, in your textbook. True or false? True or false exercise. It appears in your textbook. This is from your textbook. Yeah, so without further explanations, let's just start the question. You have to read and understand each of the following statements. We have 1, 2, 3, 4, 5, 6, 7, 8 statements. Read and understand, okay, all these statements are related to prime entry books and source documents. And you decide whether these statements are true or false. Alright? Okay. First one. Prime entry books are used to record transactions. Yeah. By classifying according to their nature and common characteristics. Okay. Now you should be thinking, who can tell me whether this is true or false? Can you? True? Did you say true? Let's go through it again. Prime entry books are used to record transactions. Yeah, we know that prime entry books are used to record transactions. We know that. That is true up to now. By classifying them according to their nature and common characteristics. Do we classify transactions according to Do we classify transactions according to their nature and common characteristics? What does it mean? Can you classify transactions depending on the nature of transactions? That's what it says. What do you think? Transactions, classify them according to their nature and common characteristics. Let's think about it a little bit. All right, let's take a transaction. Paying off the rent, paying off building rent. All right, nature. It's a cash transaction. So we classify that transaction into cash transaction category, right? And it is an expense and cash payment. So where do we record it? That's right. That's how you categorize transactions. It's a cash transaction. Specifically, it's a cash payment. And by considering that nature of the transaction, you decide that this transaction should go to this prime entry book. All right, you tell me to which prime entry book it should be entered. In which prime entry book it should be entered? Okay, I'm hearing the answers now. A lot of answers. Yeah, somebody said cash book. Cash book, that is the prime entry book. That's correct. Paying off rent, paid building rent, let's say 20,000 or 25,000. It's a cash payment, it should go to the cash book. So considering the nature of the transaction, you categorized the transaction and recorded in the relevant prime entry book. So this is true. This is true, children. Oh, what are we going to do? We will say it's true. It's true. For true statements, we'll use the T. False statements, we'll use F. Okay? True or false. Next one. Prime entry books are prepared instead of ledger accounts. Wow, what is that? Prime entry books are prepared instead of ledger accounts. Now we prepare prime entry books in a business, and we keep the different prime entry books separately to record different transactions, and that's it. We don't record the transactions in the ledger. No ledger, due to having prime entry books. Because we are having prime entry books, don't we prepare ledger accounts? That is not true. That is false. We prepare prime entry books. We record the relevant transactions in the relevant prime entry book. We sum up each and every prime book at the end of a period, and we take those sums from those prime books and transfer them to the ledger. Sooner or later, you have to prepare the ledger. You have to enter the double entries of transactions. You take the double entries from the prime books and transfer them to the ledger. So, ledger must be prepared even though prime books are there. So, prime books are prepared instead of ledger accounts? No, false. We'll use a different color for false. Okay, false. First one true, second one false. We'll check the third one. The sales journal is used to record the trading goods purchased on credit. Well, what do you say? The sales journal is used to record trade goods purchased on credit. What is that? Purchasing on credit, and those transactions are entered in the sales book? No, it's false. Selling of goods, sales on credit. If you sell goods on credit, that should go to the sales journal. Selling goods on credit, that should go to the sales journal, not purchasing goods on credit. Purchasing goods on credit, every single purchase amount, purchasing of goods, you enter them in the purchaser's journal, not in the sales journal. So this is false. This is false. Sales journal is not used to record trading goods purchased. No, it's false. Next one. Prime entry books are also known as journals or day books. Surprised? Are you surprised? No. We have already taken those names. In our previous session, I have often used those names. Journals, day books. So prime entry books are also known as journals or day books. Yeah, it's true. It's true. The next one, I'm not going to answer. You're going to answer. Let's see. All transactions that had taken place in a business should be recorded first in prime entry books. What do you say? What do you say? Let's look at it again. All transactions that had taken place in a business should be recorded first in prime entry books. All transactions, every single transaction, everything should be first recorded in a prime book. First recorded in a prime book. Should be first recorded in a prime book. Hands up those who say it's true. Oh, well, I can see your hands. Can you raise it up a little bit? Okay, then hands up those who say it's false. All right, I see a lot of hands. They say it's false, huh? All transactions that had taken place in a business should be recorded first in a prime entry book. It's not false, it's true. It's true, ladies and gentlemen. It's true. All right. Every single transaction must first be entered in a prime book, in the relevant prime book, not in the same prime book. But first of all, it goes to the prime book. Then we take the transactions to the ledger accounts as double entries. Yeah. Right. Moving on to the next one. Transactions are recorded in the prime entry books using source documents. Well, that is easy. Well, you can at once say that it's false, right? The transactions are recorded in the prime entry books using source documents. You can at once say that it's false, right? Is it false? It's true. It's true. It's true. This is true. This is true. No doubt about that. It's true. Transactions are recorded in prime entry books using the bills. Every single transaction, for everything that happens, there should be a source document. If you don't know the source documents or the meaning of or the uses of source documents, refer to the previous session. No, we did source documents in this session, children. Right? So, source documents are the bills. Common word is bills. Every single transaction, for everything that happens in a business, if it is a transaction, you issue a bill, right? You issue a source document. And those source documents are used to get the transaction information to prime books. Next, after recording transactions of a business in prime books, they should be posted to ledger accounts. What do you say? Shall I take the red color? What do you say? Okay, I'll repeat it for you. After recording transactions of a business in prime books, they should be posted to ledger accounts. True? True? True, that's right, true. It's true. It's true. Last one. A responsible officer should authorize a source document for it to become an acceptable document. Yes. We talked about it, remember? Most of the time, that is the cashier who signs and issues the source document, and there can be other officers, not only the cashier. So anyhow, officer should authorize by signing, okay, to become for a source document to become an acceptable document. Sometimes they seal the source documents. Seal means they stamp the bills with the paid seal or accepted seal. Yeah. So this is true. All right. Beautiful. Beautiful. We are done with that. Shall we move on? Write examples for transactions that are recorded in each of the following prime books. Write examples for transactions that are recorded in each of the following prime entry books. We have 1, 2, 3, 4, 5, 6. All the prime books. First one, petty cash book. Can you write? Tell me whether you can imagine. Petty cash book. What transactions do you record? Whether you can remember. We talked about this. Write examples for transactions that are recorded in these prime books. First of all, we have petty cash book. Tell me, what transactions are recorded in petty cash book? Petty cash. Petty cash. What did I say about petty cash, children? Don't tell me that I didn't explain the meaning of petty cash. I did. Petty cash transactions means, children, small daily cash payments. Small daily cash payments that happens regularly. These transactions cannot be entered in the cash book because the cash book will be unnecessarily lengthy and messy if you enter each and every transaction every time that a transaction happens. A small transaction such as giving 50 rupees to have a tea, giving 20 rupees as bus fare, or giving 100 rupees to an employee to buy a broom, to sweep and clean. These transactions are daily occurring but not entered in the cash book. There is a separate prime entry book for those type of small daily cash payments, unconsiderable cash payments. That's how we identify them. They are not like significant as main to be considered as a main item or an expense, right? Not significant. That's why we use the petty cash book to record those transactions. Then we can come up with an example. What type of transactions are recorded in the petty cash book? We already know, right? So shall we write down cleaning materials or cleaning cleaning materials, 150. Or we can write bus fare, or we can write stamp fees, stamp duty. You have to, as a business, you are posting some letters to your customers, or you are posting some letters to some government office from your business. To those envelopes, you must, to post the letters, you must paste stamps, and stamps are costing around 15-20 rupees per envelope, per letter. Let's say you are sending 2 letters, so it will be like 50 rupees. You can't enter these transactions, enter these amounts in the main cash book. Main cash book gets messy, messed up, and it gets filled up if you end up putting all the cash transactions into main cash book. So stamp duty, postal charges, what else? What else? Stamp duty or postal charges, and what else? Why don't you tell me one? Yes. Small daily cash payments, which are, very small amounts. Tea and refreshments. Okay, good. Tea and refreshments. Tea and refreshments, which means buying a packet of biscuits for the employees. Those type of small daily expenses, tea and refreshments. Okay. Next, children, we have the general journal. Okay. This is something most of the students have doubts on. Most of the students have doubts about the general journal. Yeah, I'll just tell you. If we take a transaction like a cash transaction, paying of water bill, paying of the building rent, a cash payment made to a creditor, all are cash transactions, all should go to the cash book. Or transactions such as received a check from a debtor, received a cash refund from a supplier, cash sales, goods sold on cash, all are going to the cash book because all are cash transactions. Can't put to the general journal, right? No, you can't put to the general journal because general journal is used as the garbage bin, right? To record or to put any transactions which cannot be used for other journals, which cannot be entered in other journals. Whatever the transaction is, if there is no specialized journal for that, you take it and put it to the general journal, right? Then if I give you transactions like sold goods on credit, selling a stock of goods on credit, or purchased a stock of goods on credit, all those transactions go to sales journal and purchase journal. Selling and purchasing. Then what type of transactions go to the general journal? All right. Just for your information, I'll mention a few. Okay. If bad debts occur, you are going to learn about these things, children, so don't worry. If bad debts occur, a bad debt is a debt which is irrecoverable, not recoverable, which simply means the debtor is dead or he's gone, he has disappeared. We have no way to get the money from the debtor. We are going to lose the money. It's a loss for us. Can't put it to the cash book because it's not a cash transaction. Can't put it to the sales journal because it's not about selling goods. It's about getting the money and not being able to get the money and losing the money. Right? So you put it to the general journal. Put it to the general journal. Another one. Depreciation of non-current assets. NCA means non-current assets. Non-current assets. Well, most of you, I don't think you know about depreciation, but we are gonna learn depreciation soon in a coming lesson. Depreciation means the reduction of value in non-current assets due to usage. Now, when we use the motor vehicles in the business, when we use the buildings, when we use the equipments and machineries and factories and plants and everything, they tend to, depreciate. The value goes down from the cost of the non-current asset. The value of the asset goes down, reducing of value due to usage. Well, it's not a cash transaction, so you can't enter into the cash book. It's not a bank transaction. There is no check involved, no checks involved. Can't enter the sales journal, can't enter the purchase journal, can't enter the petty cash journal. Where can you enter? Into the general journal. Those type of transactions are recorded in the general journal. Next, we have sales journal. We know what transactions are recorded in the sales journal. That's easy. We know that. Sales journal. All right, that's easy. Tell me, sales journal, what do you put to the sales journal? Tell me. What do you put to the sales journal? Several times I have mentioned. Purchasing? No. Selling. Selling goods on credit. Okay. Example transaction we have to mention. So we can't say selling goods on credit. We have to mention a specific transaction as if it has happened. Sold a stock of goods to parlor. The guy, the customer is parlor. On credit. On credit. There you go. That is an example transaction which should be recorded in the sales journal. Yeah. Here we go. The next journal is the purchases journal. Oh no, it's the bank book or bank account. We'll use a different color, shall we? Okay, we'll use a different color. Bank account. We know that bank account is used to record what? When I say we know, children, you know that the answer to this. Or when I say we already have discussed about this, I'm expecting answers from you. That's why that's why I say that we know, we have learned. You should answer. Bank account is used to record what type of transactions? What type? Bank transactions. Bank transactions. Yeah, that's right. Good. Transactions related to the bank current account. So it's always about checks. Receiving checks and issuing of checks. Paying by checks. Bank account. Let's come up with the transaction. Paid a creditor. Let's put an amount. Rupees 12,000 by check. There you go. Now the cash at hand, the cash in bank goes. You have paid a creditor rupees 12,000 by check. So the creditor he's gonna go to the bank with our check and take the money 12,000 from our bank account. Yeah, 12,000 will be transferred from our bank account to his bank account. So bank money decreases. That's a bank transaction. Goes to the bank account. We should record it in the bank account. Cash book. All right, cash book. We know ample answers. I mean, we have taken a lot of transactions, which goes to the cash book. Paying off rent, paying off electricity bills, paying off utility bills, paying salaries, receiving rent if we have rented our building, receiving rent, cash sales, cash purchases, advertising expenses, this and that, and all the expenses, all the cash transactions go to the cash book. Paid rent, rupees 20,000. Cash sales, rupees 6,000. Any transaction which is done then and there, any transaction if you have paid then and there, for any transaction if you have received cash then and there, that's a cash transaction. Yeah, right. All right, are we done? No, we have one. Purchases journal, that is the last one. Here we go. Purchases journal. Tell me, what transactions are recorded in the purchases journal? What? Yes, good. Purchasing goods on credit. That is simple, and that we know. It's purchasing on credit. Bought a stock. Bought a stock on credit. That's that. We are done with that. I hope it gave you a good exposure, a good knowledge practically about prime entry books. All right, column A shows prime books, column B shows source documents. It's a matching game. It's a matching game. Shall I match prime books to the relevant source documents? Shall I match the prime books to the relevant source documents? All right, cash book, sales invoice, bank account, purchase invoice, petty cash book, petty cash vouchers, purchases journal, deposit slip, sales journal, journal voucher, general journal, receipts. Done. It's all wrong. It's all wrong. You do it. You do it. You know about source documents. You know that a bill is issued every time a transaction happens. And you know that each and every bill is categorized according to the nature of the transaction. And those bills are used to take the information on the bills to Prime Books. In that case, you should know which bill, which source document is relevant to which prime entry book. Which source document is relevant to which prime entry book. Okay. Okay. Tell me, for cash book, which one is the relevant document? Relevant source document. Purchase invoice? No. Journal voucher? No. Debit note? No. Sales invoice? No. Receipts? Cash receivings. For every cash receiving, when we receive cash from our customers, we write a receipt. Yeah. Okay, then cash receivings go to the cash book. For cash receivings, we write receipts. Then the receipt must be the relevant document for the cash book, right? Okay. All right. Receipts. Shall we do the easy ones? We came from the top, and there was purchase invoice. There's the purchase invoice here on top. There is the purchase invoice. And purchase invoices are relevant for which type of transactions? Purchase invoices are issued for what transactions? Purchasing goods. When you purchase goods from your suppliers, from CBL, from Unilever, when you purchase stocks and stocks and stocks and stocks, more and more stocks, when you purchase goods, and when you bring in more goods, if you purchase on credit, you should issue a purchase invoice by mentioning all the goods that you purchased from this company. You write all the goods with amounts and you put the seal not paid because you didn't pay, right? You put the seal or the stamp not paid, or you just don't put a stamp when you purchase goods on credit. Then that invoice should be entered in Purchasers Journal. Purchasers Journal. Then we have again something that we know. Sales invoice. Sales invoice. Sales invoice. We know that sales invoices are issued. Sales invoices are issued mentioning all the goods sold and the total and the date and the customer's name and everything. Sales invoices are issued when customers, when they are requesting goods on credit, when we sell goods on credit. So sales invoices are issued when we sell goods on credit, and we know in which book should we record credit sales. Which book? Sales Journal, of course. Sales journal. Easy things, right? And we know petty cash vouchers. We know about petty cash vouchers. Of course, we know about petty cash vouchers. Petty cash vouchers are issued for petty cash transactions, and petty cash transactions go to the petty cash book. Easy things. Where is the petty cash book? Oh, it's here. Right, it's here. Petty cash book. Okay. Okay. And all right, now we have already marked. We have already marked the cash book. We have already marked the petty cash book. We have matched the purchases journal and the sales journal. The remaining one is the bank account and the general journal. Remaining ones. What do you think? To the bank account, what is the relevant source document? To the bank account, what is the relevant source document? What do you think? The journal voucher? Or the debit note? Or the credit note? Or the deposit slip? Well, if it is the bank, if it is related to the bank, surely it should be the deposit slip, right? If it is related to the bank, children, surely it should be the deposit slip. Yeah? Right. Then the bank account, for the bank account, the relevant source document is the deposit slip. Hope you can see this clearly. Is it confusing? Arrows going here and there, everywhere. All right. So we have only one left. General journal. Is it the journal voucher? Is it the debit note? Is it the credit note? All the others are already marked, matched. Well, if it is the general journal, children, we should memorize, we should remember this. The source document is the journal voucher. That's right. So the general journal, I will use a different color to match. Okay. For the general journal, the relevant source document is the journal voucher. Okay, how can we do this now? We'll go horizontally and match. There you go. Matching done. The matchmaking. Yes. If it is confusing, children, you can do it in a different manner. You can put numbers. Now this is also matched. You can put numbers here, 1, 2, 3, 4, 5, 6, or you can say A, B, C, D, E, F, and you can put the relevant number or the letter where you are gonna where to the column or to the row that you are gonna match this. That's more clear and it's neat. Yeah, however, just do it right. Alright, so the column A shows prime books and column B shows source documents. We matched the relevant source documents with the relevant prime entry books. Okay, are we done? Children, we are done with the lesson. I hope you got these points and you understood everything properly. It's actually not really difficult, or these things are not complicated, hard to understand, right? It's just a matter of memorizing, not getting confused between this and that. Do you understand? You get it? There are no complex formulas or anything as such. More than the memorizing, more than the by heart, the things you by heart, the things you understand will remain in your minds. The things you actually experience will be in your minds, will remain in your minds. So what my advice to you is, my dear children, get the exposure. Go see real life businesses. If you have a business, a family business, go to your shop, go to your father's, a business. Go with him. Accompany him to his site, to his factory, to his shop, wherever the business is. Just go with him. Inquire about these things. Talk to the employees. Ask the bookkeeper about the day books. Ask the cashier about the source documents, the bills. How many sales transactions, how many cash sales have been done today? What is the sale up to now? As at this point, as at this moment, how much is the sale in the shop, in the showroom? Inquire these things. Look at how the source documents are issued and the types of source documents that they have issued. Go through the pages of these books that your father is maintaining in his shop, in his factory. If there are employees, talk to the employees. Exposure. Get the exposure. One day, children, you will find these things really important, really useful, not only for your exam. Okay? So, as I always tell you, this subject is not only aimed at preparing a student to write an exam. This is gearing you up for your future, to create businessmen, to create entrepreneurs in this country. Right? Right. Right it is. Absolutely right. So, I hope to see you soon, children. With this, we come to an end. We end Unit 7, Prime Entry Books. The next unit, Chapter 8 or Unit 8, is the Cash Book and Petty Cash Book. More accounting coming your way. I hope these things are very clear to you, and hoping to get back to you soon with the next lesson. Thank you for being with me. Thank you very much. Good luck.